Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 18 September 2025. About $13 billion worth of IT deals are set for renewal by December, with TCS, Infosys, HCLTech and Wipro competing for mega contracts. Over 600 engagements worth up to $2 billion are in play as clients demand AI-led efficiencies amid cost pressures, keeping large deal momentum strong through 2025. Finance Minister Nirmala Sitharaman announced that the GST rejig is expected to put rupees 2 lakh crore back into the hands of the common people, potentially boosting discretionary spending. She highlighted that 99% of goods contributing to 12% of revenue now fall under the 5% GST slab, benefiting the middle class and the poor. The government is set to create a unified electronic land record database. This will cover both rural and urban areas, clearly defining ownership. The initiative aims to improve information flow and reduce disputes. A pilot project is underway in 160 cities under the Naksha initiative. Rural land records are already being digitized. The National Payments Corporation of India, or NPCI, the organization that facilitates the Unified Payments Interface or UPI, has announced an increase in per transaction limits for entities under categories aligned to tax payments. The changes came into effect from September 15, 2025. In a statement, NPCI has said that the increased limit will be applicable to entities under categories aligned to tax payments to rupees 5 lakh. After the increased limit comes into effect, the UPI limit for government e-marketplace, travel and business or merchant related transactions will be rupees 5 lakh. Not just that, NPCI has also increased the transaction limit to rupees 10 lakh within 24 hours for categories like insurance premiums and capital markets. Urban company shares surged on their stock market debut on Wednesday, listing at more than a 57% premium to the IPO price after drawing frenzied demand in the primary market. The rupees 1,900 crore public offering of the home services platform was subscribed 103.63 times between September 10th and 12th, making it the most heavily subscribed share sale in India this year, according to Bloomberg estimates. Mukesh Ambani plans to launch Jio IPO in 2026. It could be India's biggest IPO. The IPO has sparked debate among investors. They are discussing whether it will unlock value or create a holding company discount for Reliance Industries. SEBI's new rules aim to reduce concerns. Analysts have mixed opinions on the potential impact. The good edge is value unlocking. A Jio IPO would allow RIL to unlock the value of its digital business, a benefit to investors in a few ways. The bad edge, which is holding company discount and risk. The IPO structure could also lead to a valuation discount for the parent company RIL, while presenting inherent risks for new investors. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.